The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. We're going to take a quick look here at the DAX like we always do, and then what we're going to do is to move on to something else, which will be the Canadian dollar. But as you can see, the DAX did bounce yesterday after going down into really strong support. So it'll be interesting to see if it continues to go higher, but we'll have to wait just a little bit to see. Now, we've had a request from one of our good friends in the den, Mr. Z, to discuss a little bit about the Canadian dollar trade that we did not too long ago. Actually, it was about a month ago. If you'll notice here, this goes back about 10 months. And if you'll look at the large ABCD pattern that started in September, it pulled right back down to the 78% retracement. And then it went up and completed an ABCD pattern exactly at the 138 level. If you'll also look at the time between February and May, you'll also see another perfect ABCD pattern forming that finished up at 37.80. So what we were doing is we were selling it just a tiny bit below the 138 level. I believe it was 137.85. As you can see, the market came down and stopped right at the 61% retracement. And at that point, we took profits in that for the 24/7. That was well over $2,000 in just a matter of just about a month, which was pretty good. And then we had a 382 rally, and here is where it really gets tricky, because I really wanted to sell that rally at that 135.50 level, and we didn't get there. We missed it by about 8 or 9 pips, and I was left standing at the altar. However, as you can see here, on the day where it really broke hard, about 6 or 7 days ago, when we broke below the 134 level, folks, that was screaming so loud that it wanted to go down to this 131 and change level, that it was just, it was absolutely amazing. I still think we're going to get to 131.50 or 131.60 very, very shortly, but we'll see. But once we broke with that really wide range, and the key to that was the fact that the market was able to rally to a 382 retracement. And if you look at it, it took a little over a week. It took about 7 trading days, which is almost 2 weeks, to make that 382 retracement. And then, of course, the market, fell apart. So I sold a little bit on the way down, but believe me, I missed the bulk of the move down from the time that it hit the 135.20 area. My whole premise is, you have to kiss a few frogs before you find a princess. And what I try to do is to try to find the cute frogs. I don't want to find the ugly ones. So I try to keep my losses as relatively small as I can. And that's how I handled it. I hope that helps. It's trade management is probably one of the more difficult things to do. If you were trading this with multiple contracts, you would have taken your first one off at the 61% retracement, and your second one you just hang on and just to see if it'll go, and sometimes they do. If you remember, those of you that were with us for 24/7 way back in December of 2015, we were looking at that gold market at 3 drives to a bottom, and we did take profits on the first $80 move, but we were able to take a much larger move later on as the market continued to go higher. But that's not always the way it is, folks. Just remember, it's not the amount of money that you make, it's the amount of money that you don't lose. That's the key that you really want to be able to understand. That's the whole secret to what we do here in investing and pattern recognition and all of this. It's very, very important, to understand, that principle. Now, I hope that helped, and I appreciate the questions. It really makes it really makes it nice to, to go through and see that people have questions. But we need to look at one market today that is really trying, folks, and that is and believe me, it's not giving the old college try like we would think, and that is the crude oil market. If you remember yesterday, we were looking at this, making a bottom down there at that 44.30 level. We're trading just a little above that right now. In fact, not very much at all. And whether that's going to have any effect on this or not, we'll have to wait and see. But this is a 3-drive pattern. It's taken 10 days to complete, so it's spot on. I mean, it might not work, but boy, it's got everything there that's in your favor. There is one thing that is negative about this chart, and that is the fact that we broke down below the 78% level. That would have really been nice if we could have held as a low around 45, but we got as low as 44.24, so that's a sort of a negative. But at this point, you got a very, very low risk in order to get in anything. So that's the real key to watching this stuff, is to remember that you don't have to risk an arm and a leg. Start with your daily chart, then go down to your 4-hour chart or your 1-hour chart, and then that's when you get ready to, put your trade on and focus on the amount of money that you have at risk, not how much money you're going to make, because you never know how much money you're going to make. That's just that's the big unknown, and that's why this is such a great business, is because of that unknown. In the risk-reward equation, we don't know what the reward is going to be. So the only thing we can do is focus on the risk. The more you think about how much money you could lose, the better off you're going to be. Because winners think how much money I can lose, and losers think how much money I can win. That's the main thing. I love, my hobby is I love to play tournament Texas Hold'em. You buy in for about $150, sometimes $300, and you're playing against anywhere between 150 and 300 or 400 people, and you try to get down to the top 20. But you have a great day of fun, and if you play only great cards, that's your starting hand, that's your probability. You want to have good cards, and good cards in that game is you want to have a big pair like tens, jacks, king, queens, or aces, or you want to have ace king or ace queen or a suited king queen, something like that. And then if you get raised really big, you're assuming that the guys probably beat you, unless there's several other people that in the pot that make the value of calling that bet worth it. Then you've got to be able to do that. And that's what poker's all about. And it's not gambling, folks. Poker is not a gambling game. It's a game of skill. And believe me, if you don't think it is, just watch a little bit of that stuff on TV or some of the other documentaries that they have on the game of Texas Hold'em, and you'll see these folks are pretty sharp, and they know what they're doing. I'm a very, very mediocre player, but I'm luckier than a three-nosed billy goat. So it's that's what's kept me alive all the years. But it's been a lot of fun, doing it. And it's really just a lot like trading, because you're dealing with the amount of money that you're risking at any one time, and the trade that you're putting on are the two cards that you get. If you have two good cards, then you got a pattern. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to expand a little bit on the subject matter of that Canadian dollar trade that we were looking at. One of the most difficult things is to hold something for a very, very long time, and it takes great discipline to do that. When I first met Amos Hostetter way back in 1973, back in Princeton, New Jersey, at Commodity Corp, when I first went into his office, and he was a very, very cordial and pleasant person. No matter how busy he was, he always had time for you. But I happened to be there with my best friend, Jay Cross, who worked for Amos during the late 60s, from 65 through 69. And so he gave us a little extra time, and we had lunch with him, and I had lunch with him another time. But as he was trading, he had his position sheets. Remember, we didn't have this electronic stuff. You know, back in 1973, you basically, they had a Bunker Ramo board there, but they had Quotron machines. But his equity positions were on IBM sheets, and it was about, probably 9 or 10 inches thick. And those were the things that he was in. And yet what he was doing, he was hand charting a 15-minute chart on pork bellies. And I was really curious, and I said, you know, you've got all these positions on in beans and wheat and cocoa and everything else. And I says, what are you doing, you know, looking at a 15-minute chart on pork bellies? And he said, if I'm doing that, he said, my mind is clear and I'm not thinking about the things that need to be taken care of. And I said, well, how do you know they don't need to be taken care of? He says, well, he says, I have stops in the market. And he said, I have limits that, you know, when a price hits a certain level, that it will tell me. And he said, unless that price is hit, I'm not going to change my mind. So this just keeps me busy, and I'm able to, you know, go on and do other things. And frankly, he said, I enjoy it, but, you know, that's what I have to do. He said, I have to train myself, you know, to think long term. And the way to do that is to occupy your mind, you know, with something else. So just keep in mind that stuff like that is, you know, really important, you know, when you're learning to do this. When I was on the floor of the exchange, one of the first people that I met was a guy named Harry the Hat. And he was one nice guy, and I knew his brother, who was also a trader down there. But he had a little trading card with a whole bunch of rules on it, and I kept that all these years. Gosh, it's 36 years old now. But it's really, really great. And the main thing is, on this thing, the number one rule that he had there, and talk about this quite a bit, is never add to a losing position, because if you do that, I mean, you're increasing your risk exposure in something that you already analyzed is wrong. So you don't want to do that. It's not a very, very smart thing to do. I think the number of times that I've ever been able to do it in my 50-some years of trading, it probably was 3 times, and all the other times, they absolutely massacred you. Yes, it was. That's who it was, Mark. You're very good. Yeah, you're right, Doc. That's exactly who it was. Harry the Hat. And there was 2 Harry the Hats down on the floor. There was Harry Lawrence and his brother Ricky, and then Harry was there also. So it was really, really good. Let's see, trading board. Someone asked a question here. Is it better to trade pit trading or screen trading? Oh, I hated pit trading. It was terrible. You were exposing yourself to a tremendous risk because of the out trades. And remember, we didn't have this electronic trading. I was there from 82, 83, 84. We didn't get that until 83. But the folks at Lynn Waldock, Barry Lynn, had a really sophisticated state-of-the-art thing showing what it was going to be like so you could trade at home. So I worked out of the office up there. So I spent all of my time, other than the early morning, I would walk down when they opened the T-bills and currencies and gold. Then I would go up to the office where it was comfortable, and they had big lounge seats. You could take a nap, which I'm very comfortable doing that. And so that's what I did. I do not like pit trading. I didn't like it because of the fact that it's very loud, it's smelly, it's dirty, and it's not really exciting either. If you're there for more than a day or two, it's really not a lot of fun. Some people are good at it. But I was better at just watching the screen, because I'm looking at patterns. I'm not really looking about what's going on. Anyway, I hope I answered that, but I do not like pit trading. The only reason I went there was I knew that these machines were going to be coming, and I wanted to be sure that when you put your orders in, that they weren't flashing stops, that they were telling you, where your stops were in the market, and that did not happen, folks. I was there for 2.5 years, and I only saw a deck a few times during my whole time. A deck is the big order taker, the lead broker in the pit, and only had that happen I think twice in the 2.5 years I was there. Once because the guy just basically showed me, and the other time is because I made a mistake and I thought I was going to get my hand slapped on the wrist, but I didn't, so it turned out to be all right, and that's it. No, I never had anything to do with Winnipeg in 1971. I was still in California, and I was trading actively, but gold really didn't start trading here until 72, after Nixon took us off the gold standard. I believe it came on the board at around 109. And so those are I remember that, but that's it. I did go to Singapore 4 years ago when they opened the Singapore Commodity Exchange and they started trading gold and silver. I was asked to speak there, and that was a lot of fun. 97-story building, and it was really cool. But no, I did not go to Winnipeg. And I remember, back in the old days when we had the market would have the gold fix. They had the morning and PM gold fix, and they didn't call it a fix for no reason, folks, because that's what it was. When we got the electronic trading, the fix went bye-bye. And now you guys that are trading off these machines, you have all the advantages of a floor trader with none of the disadvantages. I mean, you don't have to buy a seat. You don't have to expose yourself to out trades, all that stuff. So you really have it. The only thing you have at risk is the fact that the internet connection goes out, and then that's a big problem. But until that happens, you're in pretty good shape. So keep in mind that's pretty much. Anytime you're trading gold, Mr. Z, you're talking about the wild, wild west. Those guys, the gold trade's just like anything else, but it's such a big size contract. You're talking right now, it's $1,200 and $1,250, so it's a $125,000 contract. And so it moves, it shakes and bakes. It's not like the S&P that lays there, in a quicksand. It's not like that. So you do have a lot of swinging going on in the gold market. So remember that. That's remember, I've always mentioned that the best thing to trade in the order is the crude oil, the gold, the treasury bonds, then the currencies, then, get into your grains, your wheat, corn, and soybeans. They're really good. And then later on down the road, when you're really bored stiff, you can trade the stock indices. But the other ones are the best thing to trade, and especially Forex. Forex is by far the best thing to. But remember, I'm doing this from a standpoint of pattern recognition, and that's what I do. I'm not interested in what the fundamentals of anything are. That just doesn't enter into the equation when I'm getting ready, for my analysis. So those are the things that I'm looking at each morning. We're going to have Stan Harley here as our guest pretty soon, coming up with the break, and we'll be right back with Stan Harley. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I wanted to mention, if any of you were watching TV last night in Los Angeles, they flashed the big bat signal in honor of Adam West, the Batman who passed away this week. I thought that was pretty cool. So I'm glad to see Hollywood got something right, because their movies are sure bombing. Stan Harley, are you on the line?
Good morning. Holy cow, Batman. Holy cow.
Yeah, kapow, kapow. Only you and I can remember that stuff. All these other people are too young.
Oh, geez.
Hey, Stan, I wanted to compliment you on the last time we had you on about 5 weeks ago. You said the market was going to go higher, and it certainly has done that. Now you're showing some trading day trend line changes, and we've got one as of yesterday or 2 days ago, right?
Indeed, Larry. I think we are right at an intermediate high. The stock market tends to make intermediate cycles, I have found, averaging about 33 weeks. That's just under 8 months on average, about 7.6 months. It's that cycle can expand and contract, but over the long haul, it's just under 8 months. And the last low in that cycle, of course, occurred back at the November 4th bottom, the election low. And if you add 8 months to that, well, we're almost there. So before we get a low, obviously we have a high. And I think we probably saw that. We just saw that this week. I track a number of things, and we'll get into it in the discussion here. But from a timing perspective, it looks to me like we probably put in an intermediate high.
Okay. Now, what would change your mind on this, Stan? I mean, would it be something that like an explosive move to the upside, or what would cause you to change your mind? Or
Well,
would
it
you
would,
change
but
your
we've got a number of things that contribute to that, not only the time cycles, but we have a number of divergences developing as well. You and I have talked on the air before about the what I call the Big Five. When I look at the market indices, I look at the Dow Jones Industrials, the Dow Jones Transports, the New York Composite, the S&P 500, and the NASDAQ Composite. And for me, those five components make up the Big Five. And in any measured bull move, I want to see all five components making new highs. Or if we're in a bear market decline, then I want to see all five components making new lows. But what has happened here, Larry, is the market has advanced. We typically see a thinning in the advance, so that when we get to the final high, you start seeing one or more of the components that make up the Big Five start falling off the new high list. For example, in this move off the November bottom, the transports topped out on March the 1st. Then on June the 9th, the S&P 500 and the NASDAQ Composite appear to have made their peaks. And lastly, on June 14th, both the Dow Industrials and the New York Composite made their highs. So what we have here is a very, very typical, from a market technician's perspective, a thinning in the advance, where the five components that make up the Big Five start falling off the new high lists. And that, coupled with several other things that contribute to my view that a high is probably in the rearview mirror.
Okay, we have a question from one of our listeners, Stan, and that is how small of a time frame do you go down to when you're looking at these cycles? Because the ones you're talking about now are relatively long term. What's the smallest time frame they're asking that you look at when examining the market?
Wow, that's interesting question. I look at cycles from a yearly basis, monthly, weekly, daily, even hourly for some of my trading. But for practical purposes, for most investors, I focus on the daily charts. We have this 33-week cycle. That's a very prominent weekly cycle that I look at. On the daily charts, there is a very prominent cycle that averages about 93 days. You and I discussed this the last few times we've been on the air. That's a very, very reliable cycle. And it has, over the last 5-6 years, that cycle has coincided with every single high or low of importance. The last time that cycle made its mark was at the November bottom. 92 days prior to that was the Brexit low. 94 days prior to that was the February bottom of last year. 93 days prior to that was the September bottom in 2015, and so on and so forth. That cycle, though, undergoes an expansion contraction at times. Sometimes it expands by a good old Fibonacci 1.618. And if you do the math, and I have, a 1.618 expansion in that cycle from the November bottom falls on falls on June 14th. Exactly June 14th. And that was the high of the Dow so far.
Wow. That's very interesting. Well, this is why you get the big bucks, Stan. Now, the next thing you talked about on this thing that you're looking at is this thing called cycle regression analysis. Do you want to tell the folks, that's an awful big mouthful for some old boy from Terre Haute, Indiana. So you want to tell the folks what you're looking at here? Is this from the old Hirsch stuff? Is that what it is?
No, not really, Larry. I do a detailed statistical analysis of cycle. And what I've done in that chart that you're looking at is I've plugged in all the occurrences of that 93-day cycle going back to 2011. And I've done a statistical analysis, or what I learned in MBA school, a regression analysis. And what the computations do is they find the least squares best fit of the data series, and it also computes the standard deviation. So the mathematical analysis is based on all the prior turning points going back to 2011. The best fit from a mathematical perspective for the next recurrence is June 14th, 2017. And the standard deviation on that is about 1.9 trading days. And, wow. That says to me we should look for a pivotal turn in the vicinity of June 14th, plus or minus, and I usually give it 2 standard deviations, so that would be about 3 to 4 trading days. And thus far, June 14th was the high in the Dow and the New York Composite. Well, that's just one of the tools I use, but it's a very, very powerful tool.
All right, I've got another question for you, and I want the answer to this one myself. Why don't you write a book about this? This is really great information. Or you just don't want people to know it, or what?
No secrets in anything I do, Larry. And I know you've written several books, as you well know. It takes a lot of time to sit down and draft a book. It takes a big chunk of one's time, and doggone it, I just haven't had the time to do it. It's on my list of things to do, but I haven't gotten to that yet. I have a couple publications I produce, as you know, and I'm a money manager, so the days are full. Haven't gotten to that little chore yet. That's definitely on my list of things to do.
Yeah, the only way I was able to do it was to do little bits and pieces every day, and you'd be surprised if you did like a half hour to an hour every day. You'd be surprised how quickly it all starts to come together, and then you get somebody to edit it for you, and then you can put it out. But this is something that really should be out there. I know Yale Hirsch does some of this kind of stuff, but he doesn't do the really advanced mathematical analysis like you do. So I really urge you to do that, Stan, because you're not going to make a lot of money off of it, but you're going to have a legacy, and you'll be surprised how much you'll enjoy doing it. And we'll take a break here. We'll be right back with Stan Harley of Stan Harley Stock Market Cycles.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're talking with Stan Harley of Harley Stock Market Cycle. Stan, I have a favor to ask. Is there any chance I could use that regression table that you have in my newsletter this week?
Yes,
I will give you full full accolades for it, and of course, I'll tell everybody that you learned everything from me.
Of course.
But I'd really like to show the folks, what you're doing here, because it shows the statistics behind the market, and I really think it's very, very worthwhile.
Absolutely, please, with my compliment.
Okay, let's go on to the next one that you're looking at, that you describe as the, I guess it's described as the high-low differential.
Larry, I look at a number of what I call market internals. Advances and declines, new highs, new lows, unchanged issues. Put all those daily into a big spreadsheet. New highs, new lows can tell us a lot about what's going on in the market, and that data is easily available on the internet. I dump all the data in a spreadsheet, and I track a very simple 10-day and 30-day moving average of the net difference between new highs and new lows. And you can see on that chart that I sent you through yesterday, that plot, which I call a high-low differential, has shown a number of peaks, but the peaks are getting lower and lower on the graph as the market has moved higher. What does that mean?
That's really bearish.
Yes, indeed. Yes, indeed.
Wow.
And again, this is part and parcel of my theme that an intermediate high is being made. As the stock market has moved higher, new highs and new lows are contracting on that chart, as you can see. And that's just another piece of the puzzle that's highly suggestive of an intermediate high, either formed just a day or so ago or coming in the very, very near future within the coming days. I think we are either at or very, very close to an intermediate high. Another indicator that I track, again, for market internals is unchanged issues. I plot a very simple 10-day and 30-day moving average of the unchanged issues. And what typically happens, Larry, is that unchanged issue index reaches a high as the market is making a high. And conversely, unchanged issues typically reach a low when the market is making a low. And then sometimes, as in any technical analysis chart, there are divergences. And you can see, as the market has moved higher from the November bottom, unchanged issues are very, very high on that graph. And we have a classic divergent structure there in that plot. So that, coupled with the high-low differential, the difference between new highs and new lows, is another piece of the puzzle, again, telling me we are either at or very, very close to a market high.
Wow, I've never seen anybody look at the unchanged. Would this have something to do with the volatility, the fact that we've had such, little volatility in the market over the last, 3 years or so? I mean, what
Yes, Larry,
causes it?
actually does. When you think about it, it kind of makes sense. The stock market tends to make rolling tops, rounded tops, and spike bottoms. Uh, Contrast that with the gold market, for example, which does just the opposite. Gold tends to make spike tops and rounded bottoms.
Mhm.
So the investors that trade those two markets do things in opposite fashion. But as a general statement, which you were alluding to, yes, the market volatility tends to dry up at market highs, and that's reflected in the unchanged issues index. Conversely, the volatility tends to expand as we reach a market bottom in the stock market, and then the number of unchanged issues, of course, decreases, and that's reflected very clearly on that chart.
Stan, I've been doing this for a long time, as you know, because I've known you for 40 years. But this thing is really unusual. I've never seen anybody do anything with unchanged. I see new highs, new lows, but the fact that you're doing something with unchanged issues is really quite amazing. What gave you this idea?
Just I look at everything I can find under the apple tree. Most of the things I look at, I tend to throw in the trash can, but sometimes I find something and I pick it up and I say, "Oh, well, this is interesting."
Wow.
It just popped into my head. I don't know what else to say there.
Isaac Newton wasn't around that same apple tree, was he?
I think so.
I was just over in London a couple of weeks ago. We went past Westminster Abbey, and he's buried there, and it's really gives you goosebumps when you think about the guy, and it's really really amazing. In fact, as we crossed the Westminster Bridge, that's where the big terrorist attack occurred, and it was all cordoned off and everything. And there were so many tourists there, just going past the place, leaving flowers and stuff. That was really chilling. You realize, boy, we live in a really strange world these days. So you have to be extremely careful. Anyway, Stan, I have a question for you. When you do these cycles, do you do these all by hand, or do you have these computerized?
Larry, I do it. I use this incredibly secret method called the LAR method. Don't tell anybody this, but it's called the LAR method. LAR. Looks
Okay.
about right. Don't tell anybody. That's a secret.
Okay, we'll keep it a secret. Yeah. Okay.
What I do is I just look at a chart and my eyes pick up these recurring rhythms, and I actually have a little plastic tool I lay across it. It's sort of an accordion style tool, and that helps me pick up the cycles visually. And then I do a statistical analysis if I think I have something. And that's what I do. I do a regression analysis of the data.
Wow.
That tells me what the standard deviation is from a mathematical perspective. And then I calculate the next likely recurrence of that cycle, and I know, okay, we've got a cyclical turn due on or about this date, and based on the historical standard deviation, plus or minus X number of days. And I usually give it plus or minus 2 standard deviations.
Wow. Stan, when we were in Southern California together, did you ever get to meet Peter Eliades?
I know Peter quite well. Yes, indeed.
Yeah.
He lives up in Santa Rosa, California.
Yeah, he sure does. He's lived up there for about 30-some years now. Man. Oh, yeah, he's a class act. But did you ever? I'm sure you've seen his giant Torah. The rollout of all the Dow Jones charts going back to the 1950s that he's kept by hand. He still keeps it. He says it weighs about 40 pounds now.
Yeah, Peter does a prodigious amount of work.
Yeah, he sure does.
Back when I was the president of the Market Analysts of Southern California here in LA, he came and spoke to our group on a couple of occasions, and Larry, he packed the house.
Oh yeah, and he's very entertaining too. He just and he's such a nice guy. I know you know this, but he played the clarinet and the piano. That's what he actually did. But in the time when he wasn't trading, and then when he actually got into trading more, he sort of gave that up. But his son George, I guess, is a pretty good clarinet player. I understand, but he sure has a hand-drawn charts of the Dow Jones going back so far. I just can't. And I asked him, why do you keep doing it since everything's on the computer? He said, once you get started, why quit? I guess that's a good idea, right?
Absolutely.
Hey, listen, Stan, thanks for joining us, and we'll have your stuff, how to reach you and stuff when we come back from the break. Thank you very much. We'll have you on again soon, okay?
Terrific. Thank you, Larry. My pleasure.
Thank you, buddy. Yeah. See you later.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and they're starting to rock and roll in the old stock market today. I guess the jobs number or something didn't pan out the way everybody thought, but we'll have to wait and see. Folks, keep an eye on this gold. We're going to get down, I believe, to the 1248 level really quickly here. Won't be today. Well, it could be today. It's only $8 away, but we need to watch that a little bit closer. But silver's broken down below the 61% retracement. Gold is rallying like a dead cat that's been in intensive care for months, so it doesn't look like it wants to go very far. So watch it. Now we got some pretty key support in the S&P at that 2417 level. level. We hit 24.16 and change yesterday, so that should give you some support. But going below that, then you're looking at prices below the 24 level. And as Stan Harley just mentioned, he can build a pretty good case that there was probably a top made this week, and of course, if it goes above that, then that won't be the case. But right now, the market has a tiny bit of a bearish tone, and the emphasis on that is a tiny bit. That's the real thing to keep in mind, what we're looking at. Crude oil is still at a 3 drive to a bottom pattern, but again, it's doing the same thing that gold is doing. It's just not rallying. So maybe it will later, but it's certainly not doing it now. So that's a bad sign also to keep in mind as you're looking at some of these things unfolding, for today. But this is still early in the day. Remember, it's a Friday, and pretty soon we're going to be starting the summer doldrums, where Fridays after about 10 o'clock in the morning, New York time, things really start to thin down, and you don't get any of the usual volatility that you might see at any other time. So this is going to be happening very, very shortly, because these folks take vacations. They head out to, I guess, where is it out, Montauk or wherever they go, up in where the rich people are, and we'll see. Anyway, that's what we're watching here this morning. One thing we want to do is try to log in on Monday to listen to the show. We got some great stuff. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.